Yaar, all my stocks are in red again.
The stock market is like a Bollywood movie. There is so much action, so much drama.
Right. What would you call bonds then?
Bonds, it's a 3 hour long boring documentary.
What did you say? Bonds is boring. You know, this boring documentary is the backbone of a country's entire financial system.
What? I don't buy it.
You don't? Bond markets have changed powerful governments and policies. Let me show you. You don't believe me? Let me tell you two real stories. It's 2022. UK Prime Minister Liz Truss had an ambitious economic plan and she announced massive tax cuts. The bond market doesn't like it. You know why? These tax cuts meant government would have to borrow more money to fund government plans, and that could result in higher inflation, higher borrowing cost, and instability in the markets. So what did investors do? They dumped UK's government bonds. Bond prices crashed, yields shot up. Government feared that borrowing costs could suddenly explode. Within weeks, Truss had to fire her finance minister, scrap her plan, and she finally resigned. She didn't lose to the opposition or to the voters. She actually lost to the mighty bond market. Now, cut to the US. This year, President Trump announced his most aggressive tariff policy.
100% tariff, now it's 145%, 200% tariff, 200%, 300%, 400%.
Same result. Investors sold US government bonds, confidence dropped, markets tanked, and the bond market reacted so violently that Mr. Trump had to pause it immediately.
Bond market is very tricky out there. If you look at it now, it's beautiful.
What? That happened because of the bond market.
Exactly. He later selectively targeted India and China, but that's a different story. The bond market is the ultimate credit rating system for a country. If it doesn't like your plan, you pay the price.
Imagine the power of bond market, and yet most people in India don't know it exists.
Yeah, and this boring asset is actually the oldest investment still traded today. The first bonds date back to 2400 BC in Mesopotamia, and they were paid in grains. And by 1100s, Venice was issuing bonds at 5% to fund wars. And you know, here's the wild part. The world's oldest bond, issued over 400 years ago, is still paying interest today. So, bonds pay.
Oh, so bonds are like the OG of finance.
Globally, bond markets are worth $145 trillion.
Wait. That's bigger than stocks?
Much bigger. In fact, developed countries like US, Japan, Singapore, their bond markets are way bigger than their stock markets. And retail investors showing up like never before.
Yeah, I'm just reading this. Retail participation in bonds have doubled in most developed economies.
See, when the boring bond market starts attracting retail, you know something big is changing.
So what about India's market? Where do we stand in all this?
Yeah, so India's bond market is about $2.6 trillion. Not small, but India's stock market is $5 trillion, which is quite the opposite of what we saw in countries like US, Japan, Singapore. Which means two things. One, we are still early in this journey, and two, there is massive room for growth.
Okay, but why is our bond market smaller?
And what about the retail investors' participation here?
Yeah, so until recently, bond markets were out of reach for retail investors in India, and for a variety of reasons. High minimum investment sizes, complicated processes, and honestly, no one bothered in India to explain bond markets to retail investors. So, institutions dominated the markets while people like you and me were left out. But that's changing. Thanks to SEBI's reforms and OBPPs, anybody can easily access bonds on a digital platform now.
That's how I invested in bonds with just 1,000 rupees.
That's less than a matcha bills.
And you know what? It's not just us. Even RBI launched something called RBI Direct recently, and there people like us can go and buy government bonds and securities on a digital platform. US, on the other hand, did something like this 20 years ago.
So wait, why are these governments doing all this?
Because retail participation matters. It makes the market more diverse, more stable, and for investors, it unlocks a new asset class for investments.
Yeah, for a matter of fact, bonds actually give you more returns in a variety of different asset classes.
Yeah, people talk about risk, but Finance 101 says equity is riskier than debt.
Right, and I don't think that bonds are about chasing crazy returns. They are more about balance.
Exactly. Bonds provide diversification, stability, and predictability. And see, guys, bond markets in the US, Japan, Singapore are already mature markets. And now it is time for India. And retail investors have a big role to play in this.
That's super interesting, Vaibhav. But I have one more question though.
Now, I have a meeting to catch some other day.
Okay, bye.
Bye, Vaibhav.
Bye.
Do you get it now?
Investments in debt securities, municipal debt securities, securitized debt instruments, mutual funds are subject to risks, including delay and or default in payment. Read all the offer related documents carefully.